I want to welcome in Scott Bauer, CEO of Prosper Trading Academy, to talk a little bit of what's happening in the currency and treasury markets. Scott, welcome to the show, my man.
How are you? Good morning.
Scott, to start off, I always like to focus on the dollar. It's my just focal point of the day. I believe the dollar is the driver for all the currency markets right now, and I'm curious on your thoughts on how the greenback is doing post that monster unemployment number from Friday.
You know, it's really hanging in there quite a bit after a pretty big drop-off where we've seen that, over par, all the way down to that, 96 and change level here. And there's some major support just down below, JB. If you look at the lows that the dollar hit back in March, right about that 95 level, I wouldn't be surprised if we kind of drift down towards that level here. But listen, with the complete risk-on sentiment in the marketplace now over the last few weeks, and especially after that monster number on Friday, you'd expect the dollar to be a little bit weaker, and that's exactly what we're seeing.
So I'm going to leave the dollar there because I think it's going to sprinkle in some of our conversation here as we move along. But I'm going to start over in Asia and kind of bring our back to the U.S. But I want to get your take on the yen. The U.S. dollar just traded its highest level in more than 2 months against the yen. However, the yen now is green after being red last night to start. But overall, I'm trying to figure out, is this a sort of a supportive reaction to, as you were saying, that risk-on trade sentiment where the yen is seen as a flight to safety? Or is it some of the potential opportunity that's coming out of the yen being kind of hit over time that people are looking to possibly buoy it up a little bit?
I think right now it's more of that flight to safety. If the reopening continues to go well, then I think that, we'll see some of the latter, what you just said there about, maybe the yen got beat on the head a little bit too much, too far over the past. But for right now, I do think it's more of the risk-on type of scenario because, listen, where do people flock to when there's trouble? Where do people flock to in times of volatility? And it's really the dollar and the yen.
So as we stay in that part of the world, I want to focus on two currencies that may not be at the top of most traders' radar, but I think it's an important one to keep an eye on. And I'm talking about the Australian and the New Zealand dollars, right? So both of those currencies hit really big numbers, big, huge pops since basically highest numbers since January. And it appears that this rally was really based upon sort of that smaller than expected fall in the Chinese exports. So very much commodity driven as those two economies are. I guess my question here is, do you have some doubts or some questions that have been in there about that Chinese recovery? Or was, again, looking at this opportunity, is this the dollar weakening just finally gave a nice of a pop to both the Australian dollar and the New Zealand dollar?
So there's a lot to digest there, and you make up great points all across the board. Number one, I do think some of it is just, the weakening of the dollar is helping to strengthen the Aussie and the New Zealand dollar. However, if the numbers coming out of China, and again, it's a big if. We've been saying if for a while here. But if those numbers coming out of China really are positive and really are on, an optimistic track, let's say, then that is very supportive of the Aussie and the New Zealand dollars because they are so intertwined with the Chinese economy. So if we do see a bit of a ramp up and some optimism there, that would strengthen that as well.
All right, so as we kind of move our way, I got to go into Europe, and I want to sort of focus on the euro. The euro has been a great story with a big move to the upside since what we saw happen back in March. I think a lot of people would argue across the board. I guess the question for me on the euro is most of this move up that we've had for the last month or so, is this based upon some of the belief that, again, the euro was undervalued, or do we start to believe that the ECB's announcement of increased bond purchases is enough to keep it going? Because again, we have some big numbers coming out of Europe all week. So I'm kind of curious to get your take on what you're seeing there.
So here's what, JB, that I really think is more specific to what's going on in the Eurozone than it is a dollar euro type of event. We're at the strongest levels here in the euro that we've seen in about 3 months. We're seeing easing. We're seeing a little bit better numbers come out. We're seeing out of Germany, industrial production was awful in April, but we're seeing a little bit of upside there. And obviously the move that the Eurobank, the ECB made last Thursday, increasing their emergency bond purchases, just more than it had been expected. that is underpinning the euro as well. And I think that is really the move that we've seen in the euro is really more specific to that zone than it is as a comparison to the dollar.
No, I think that's interesting because we've kind of been really beaten down on Europe for a while here, saying when are they going to come through, even prior to what was going on with the pandemic. And so it's interesting to see sort of that movement start to come through, because that's what I've been looking at is all these different countries seeing, are we starting to see them not only open, but the production return. So
Right.
I think that is a really great point that you highlight there. I'm going to slide across the pond there, or across the channel to the British pound.
The channel.
Yeah, and I'm curious because I've been looking at the pound for a while, and a lot of kind of the desire or seems to move in there with sort of some hopes of conversations of Brexit, some of the pre-COVID conversation being, is there an opportunity for this to get done and move forward? Fishing rights, things were on there. I'm just curious, do you take that same perspective of saying, let's go over and look at the euro, and now let's look at the UK and the pound separately as well, or do you see their move kind of corresponding together here?
I really think they're corresponding together, at least until we get through, and hopefully sooner rather than later, the COVID, the pandemic issue. And then we get back to what were all those discussions? What was the scenario like, at Brexit time? I mean, when's the last time we talked about Brexit, right? I mean, it's obviously been put, way on the back burner. So until we get through the let's call it the demise of the world economy, and we see the optimism, and whether it's 2 months from now, 4 months from now, 6 months from now, I think they're going to be very, very interconnected.
All right, so I got one more currency question for you. I think I've hit all the countries out there. I've hit the full G7 pairs across the board. But I want to hit the Canadian dollar here before I turn our attention to the Treasury market. And the reason I do is we were talking just a few moments ago about crude oil and the importance of crude oil. And I want to take a step back and talk about the Canadian dollar, because sometimes people forget that this currency really goes lockstep with what we see in the crude marketplace.
100%. And Stephanie made some really great points. You talk about the overall equity market here being tied to crude. Like you just said, the Canadian dollar is specifically directly tied to crude. So, what have we seen over the last few weeks, over the last month or so in crude? It's been a big spike up. And I think that's what's underpinning, and that's what's given some major tailwinds to the Canadian dollar.
All right, so before I let you go, I got one last question for you. I'm going to go to the Treasury markets. I feel like you have to keep the currencies, the dollar, and go to the Treasury markets. Yields, big move on Friday. Non-farm payroll, we keep talking about it. What's on your radar this week? Do you expect to see some big movements continue in the Treasury markets, or do you think everything kind of takes a little bit of a pause till we hear from the Fed on Wednesday?
I would like to see a pause, JB. I don't like when we get these big spikes or big declines one way or the other, because that tells me that the market is kind of nervous and really on its toes, and you get some knee-jerk reaction. So I'd like to see it calm down a little bit. And what is the Fed really going to say? What's Jerome Powell going to say? They're not going to really give any indication, in my opinion, that we're raising rates, even with the positivity, even with the optimism of reopening, even with that great jobs number. So I think, it would be, in my book anyway, kind of easy to look at and say, yeah, maybe we ran a little bit too far with rates, and we see those back off a little bit.
Well, Scott, I appreciate you coming on. It's my first day back in the saddle here. I pushed Ben out of the way. It's great to see you as always. Appreciate the knowledge across the currency markets and the Treasury markets. Everybody, that was Scott Bauer, CEO of Prosper Trading Academy, joining us for a little knowledge sharing.